So when you buy $100 pair of shoes and you only have to pay $25 that day, and then the pair of shoes show up at my apartment 3 days later, the shoes are $25. Why do I care if in 2 months I have to pay another $25? I don't know me 2 months from now.
U.S. citizens own a massive amount of collective household debt. In fact, it's nearing $19 trillion here at the end of 2025. There's a silent predator that's lurking around your bank account, and it's actually threatening to increase that debt if you're not careful. Now, this predator does not charge 29% interest like a credit card. It doesn't call you with collection threats. In fact, it tells you it's your friend. It's called buy now, pay later. And companies like Klarna, Affirm, and Afterpay offer this service.
Buy now, pay later service Klarna is partnering with DoorDash to allow you to defer payments for delivery services. The aim is to give consumers more flexibility when it comes to their spending power. Finance experts say this could be bad news for the economy. NewsNation's Alicia Nieves has been following this story. Alicia, so many questions. First, break down how this will work.
Yeah, this is really interesting, and we know that a few companies are doing this. It's coming kind of in the headlines because Klarna just this week announced that partnership with DoorDash. And basically what's happening here is, listen, if you want to buy lunch today and maybe your bank account's running a little bit low, you can buy that lunch today on DoorDash, and then you'll split the payments for that maybe over the next couple of weeks or months. They haven't really outlined exactly, the payment arrangement because this hasn't launched yet. But I looked at another company that's doing this called Zip. That company, you can actually buy, a big batch of groceries. We call it compra in Spanish. At Costco's or ShopRite, and then make 8 payments over 8 months for that batch of groceries.
Wow. So, and we're going to get more into that grocery piece a little later, but isn't that frightening that there are people out here in this economy who have to finance groceries? So if you finance groceries and you miss a payment, then those groceries are going to end up costing more. And if people are doing this, then they are charging groceries to a credit card and carrying over that balance, making every one of those grocery items, again, cost more. Troubling, to say the least. And there is a component in there of the lack of discipline. I can tell you right now, when I was young and dumb, I definitely would have been a victim. I don't want to use the word victim. Well, yeah, a victim of my own stupidity. In doing something like this when I was a college kid. I can see me doing that. Okay. But look, here's the tactical reality. In 2025, the global buy now, pay later market, it's hitting $560 billion. Now, why is that? It's because it's the most sophisticated psychological ambush ever designed. It's not a payment tool. It's actually a friction removal tool, and it's designed to bypass your brain's threat detection. Let's demystify this whole phenomenon. We're going to take a look at why 41% of users of these services missed a payment last year, why the invisible debt is about to blow up credit scores all across the fruited plain, and how you can spot this ambush before you're surrounded. Now, you're going to need to share this video with at least 2 friends, 2 loved ones that you want to help avoid these financial traps, okay? Young people especially could benefit. Now, this particular enemy to your financial future, its greatest weapon is called present bias. Humans, we're hardwired to value a reward right now and ignore the cost later. That's why a lot of people don't get interested in investing and saving until later in life when they should do it as early as possible. So buy now, pay later companies, they use a tactic called the pain of paying. When you hand over a $100 bill, your brain registers a small sting of loss. It's like an anti-dopamine hit, right? But when you click that pay in 4, you aren't spending $100, you're spending $25, and your brain doesn't register that as a threat. Now get this. Merchant data shows that buy now, pay later increases the average order value by up to 40%. So you aren't just paying differently, you're being manipulated into buying 40% more than you originally intended to purchase. So it's a sort of financial camouflage. They hide the total cost behind 4 small installments so you don't see the army of debt that's marching towards you in your next paycheck. But I tell you, you got to beware because these companies, they have every angle covered. For many, many years, buy now, pay later was pretty much invisible debt. It didn't show up on your credit report. You could have 10 different pay in 4 plans and still look like you had a clean slate. That era has concluded. As of late 2025, FICO has launched some new models. FICO Score 10 BNPL, where the BNPL, of course, stands for Buy Now, Pay Later. This is a different index. The major credit bureaus are using it, Experian, TransUnion, and Equifax. They're vacuuming up this data. And here's how it can affect you adversely. They think, consumers, I say they because you're a soldier of finance and I know you are not going to get caught in this trap. This is why we got to share this information. But folk think that because it's 0% interest, at least initially, that it's safe. But if you have 5 active loans, a lender's looking at your mortgage application or your vehicle application, and they're seeing a high risk pattern. Your loan stacking is what they see. And oh, by the way, if you miss a payment, yeah, interest can start to accrue anywhere from 1 to 36%. You got to read that fine print pretty darn carefully. And you got to now ask yourself, is it worth buying groceries under these circumstances? 63% of buy now, pay later users have multiple loans active at one time. 33% are juggling those loans across different apps, different platforms. So this isn't budgeting. What this turns into very quickly, has the potential to turn into very quickly, is a liquidity crisis in your bank account. And unlike the US government, of course, you just can't print money whenever you need it. Now, here's a dangerous, very, very dangerous shift. You saw how DoorDash was involved in this whole thing, right? So you can actually finance a sandwich from Chipotle if you like. But there's another dangerous shift that we're seeing develop and accelerate. And it's a shift from using these services to acquire luxury goods to using these services to survive.
While buy now, pay later loans have been in use for big ticket items for years, new data is showing that a growing number of American consumers are using the payment method for everyday items. A recent survey from LendingTree finds that a quarter of consumers are using these payment plans for groceries. That is up 14% from just a year ago. A survey found groceries to be the 4th most common buy now, pay later purchase among Gen Zers, trailing behind clothing, technology, and home decor. CBS News Money Watch correspondent Kelly O'Grady joins us with more on this. I mean, we keep seeing this rise in buy now, pay later items, whether it's for Coachella tickets, but what does it say to you that people are using this now to buy groceries?
Well, guilty. I did use it for Coachella tickets, Nancy.
All right.
I will out myself. But
I was going to say other people, but
At least she's honest.
Groceries, though. I mean, we saw one of the buy now, pay later services do a partnership with DoorDash, right? Getting food delivery as well. And it really speaks to the fact that people are dipping into these alternative ways than just, hey, I've got the money. I'm going to be able to pay it on my next credit card statement, or I'm going to be able to pay it with the money in my account by using a debit card. And what can be dangerous about these BNPL services is you feel like you've got more room in your budget than you actually do.
Absolutely. She's absolutely correct with that. So when you start paying for, let's say, a carton of eggs in 4 installments, then your cash flow is officially compromised. You're borrowing from your future self just to survive the present. Now, that indicates a huge issue in not just national economics or global finance, but in your personal economy as well. All right, so how do we deal with this? Well, there are three ways to control this and stay away from these buy now, pay later options. The first one is to enforce what we call the 24-hour rule. Buy now, pay later, it thrives on impulse, right? So if you can't pay for it in full today, just wait 24 hours. Let that adrenaline wear off, because that does play a role in your psyche with regard to impulse purchases. Let that die down and then think about it. Did I really need that after all? And a lot of times you'll come to the conclusion that you didn't, or that if you do, you'll just save up and buy whatever it is free and clear. The next tip is open your banking app. Okay. Do this. This is helpful to do generally, right? Count every last one of your 15, 25, 30, and $40 withdrawals that are scheduled. So that's stuff you've got coming out automatically, the streaming services and whatnot. Add that up. Understand what you are currently on the hook for with all of these small transactions. Look at it from a larger standpoint, right? That helps you know where you really are in the water. And listen, use the credit card test. Simply say, look, if I wouldn't put this on a credit card because I'm afraid of the bill, I'm afraid of the interest, then don't use buy now, pay later to purchase that item. Okay? The bill is the same, only the timing aspect is different. And of course, if you pay it off in full, you can avoid those interest charges. But if you can't, then you gradually work your way into a problem. So capitalism provides these tools, but we got to be smart, right? It's our job to provide the discipline. Buy now, pay later. It's a tool for the companies, Klarna, okay, Afterpay, but it's usually a trap for the middle class, for us. Let me know what you think in the comments.